Hello. One of the themes of Singapore Investment Week this year is tapping into the growth beyond Singapore's shores. And of course, many people would be thinking of China when thinking about broadening their investment horizons beyond the local market. We've invited CapitaRetail China Trust to join us today. The Chief Executive, Tony Tan, is standing right here next to me. Thanks so much for coming in.
Thank you, Mark, for
You have 9 malls in 6 cities in China. Can you just give us an overview of what it is that people would be buying into if they were to buy units in your trust?
Well, I think if for retail investors who are comfortable looking at the CapitaMall Trust, then the easiest, I would say, introduction to CRCT, in short, CapitaRetail China Trust, is that we are the equivalent of CapitaMall Trust, with the exception that we invest in China, shopping mall. So we are in the same segment of the real estate business, shopping mall. Our property are located in China, but listed in Singapore.
Now tell us about the malls that people would be buying into if they were to buy the units in CapitaRetail China Trust. Are they the same high-caliber, glitzy shopping malls, I guess you could say, that we're used to from Singapore?
I think by and large, our mall cater to the mass market, like what you see in Singapore. Predominantly, we are you can say a one-stop shopping center cater to the family. So we have what you see. If you walk to any mall in Singapore or you walk to any mall in China where we have invested, more or less they are about the same, with a slight tweak perhaps in the type of trade and the merchandise we offer to the local market that we may have to adjust accordingly. But
so can we picture something like IMM or J-Cube along those lines?
If you walk to Tampines Mall, for instance, or Bugis Junction, when you're in a mall, you can't really tell whether you're in China or in Singapore.
Really? Okay.
Yes. Especially so, if you look at in Singapore context, China, they're no different from Singapore. Everybody loves to shop in Singapore. In China, it's the same. The Chinese love to shop.
Yes.
The Chinese love to eat. The restaurants are full all the time, just like what you see in Singapore. So when you step into any of our malls in China, essentially, you can tell the difference. Yes.
And how much of that growth in the mass market in China that we hear so much about in the media, you know, people always talk about 1.2 billion people, blah, blah, blah. I mean, is that really the sort of growth that you're then able to tap into as those people want to move up the value chain, become more affluent, become more middle class?
Yeah, I think by and large, you can say the people have, over the years, of course, get more affluent and their lifestyle has changed. I think when we started in China more than 1995, during the CapitaLand days, shopping mall concept is completely new to them.
Really?
Most of the people were very used to shopping in the high street, you know, the traditional market. When shopping malls first surfaced in China, it was a new concept.
That's only 7 years ago.
Yeah, but now, today, it's a new lifestyle. Everyone wants convenience. Everybody aspires to have a lifestyle as their income grow. And hence, of course, over the years, the merchandise, the product that we offer to the market has changed as well.
Now, how do you then actually make your money? Because it's not just about the rental. Presumably, you also make money from the advertising billboards, car parking space, and you also take a share of the revenue that the tenants earn. How does that all work, and where do you earn the most?
I think being a REIT, we tend to have a higher component of our revenue coming from what we call the fixed rent. That means every tenant that signs a lease with us will have a base rent that they will have to pay. And then depending on the trade and depending on the tenant themselves, we will negotiate. We would like to have a share of the upside because we like to see our tenants do well. If our tenants do well, we get a cut in their turnover. So most of our leases are structured that way.
Mm-hmm. How much of a cut is that? Is that just like a shaving off the top, or is that a fair chunk?
Well, you can say there are typically 3 types of leases. The most straightforward leases will be the fixed rent. They pay a fixed rent, and over the next 3 to 5 years, there will be some natural step up. And then the other type of leases that we have in place will be a combination of fixed rent plus a certain percentage of the turnover, depending on the trade again. And this is on negotiated basis. We talk to the tenant and see what I think is a fair deal. And the third type will be a fixed rent or a certain percentage of turnover, whichever is higher. So in most of the cases, we like to structure the leases in such a way, and we do our best to help our tenant do well. Yeah? And then hopefully if our tenant does well, we will share some upside in the rental as well.
Now, earlier in August, we heard about retail sales figures from China. You might have just caught them in the newspaper, which showed, in essence, that growth was still around 13% or so. Let's be honest, that's a big growth year on year, 13%, but it was short of expectations. And, you know, you also read in the newspaper headlines about China's growth slowing. Is it going to have a hard landing? All these concerns. When you travel to your malls, as you do once a month or so, what do you actually see on the ground?
I think when you start reading this headline news, you got to analyze a little bit more carefully. Of course, by and large, 13% growth is still respectable growth.
We'd like to have that in Singapore.
Yeah, most countries would love that, to have a kind of 13% growth in the retail sales. But I think we need to analyze it carefully. Of course, certain sectors has been affected. Generally, we can't deny that China growth has slowed and quite broad-based. And particularly hardest hit will be the export sector, because the external demand has essentially been gravely affected by what's happening outside China. But we also know that the Chinese government has been trying their best to restructure their economy, to bring up consumption as a key pillar going forward. And we have already seen some measures put in place. So we are quite confident that, no doubt, at 13%, it just came off from, if you could recall, a few years back, they are growing between 15 to 20% retail sales for a couple of years. And now it's down to 13%. But we are quite confident that on a macro level, the government has been putting in place a strategy to boost up consumption. Some already surfaced, but there are things that I'm sure they are looking at plans to help to see how they could restructure the economy. And going forward, the mega trend, something that I think will not change, is the urbanization. More and more people are living in the city, and hence more and more people need to shop in an urbanized shopping environment. I think we are in that space. Yeah.
What sort of expansion are you planning then? I mean, if you have 9 malls in 6 cities, there are so many provinces in China, each with dozens, if not hundreds of cities, then how do you actually tap into the growth on a much broader basis than just these individual malls?
I think we have a 3-pronged strategy. Organically, of course, we'll grow, mean that we'll upgrade our mall and upgrade our tenant mix, make sure that we move with time so that the tenant, when our shopper has a little bit more money to spend, hence our merchandise has to change, and therefore our tenant mix has to change as well. So that organic growth is one of the strategies, and I think we have done very well for the last couple of years. And of course, when we need to do some major changes to our shopping center, that's where the enhancement activity will have to be invested, and we have already done that as well. I think if you some people could remember that back in 2008 we did a major asset enhancement work to one of our mall in Inner Mongolia. We call the Saihan Mall, which essentially changed that mall from a single tenant master lease mall into a shopping center. And that, since we have completed the enhancement work back in 2010, I think our revenue has been just growing exponentially. And last year we did the MPI for the mall clocking close to 50%. Yeah.
And what is MPI?
Net property income.
NPI, net property income, was up by 50%.
More than 50%, yeah.
Right. But you have 4 malls in Beijing, 1 in Shanghai. Do you expect to be growing more in the big tier 1 cities like that?
The last strategy, of course, through expanding our current asset base through acquisition. We have our sponsor, CapitaMall Asia, which is kind enough to, and they are really serious about China, and they have been investing in China. So they are building a pipeline for malls that over the time, when it gets mature, Xia City will have the first right to acquire. So that pipeline has been built. But having said that, we are also looking out externally for potential acquisition. And during a downtime like this, I think it's a good time for us to sniff around.
Is there anything, finally, which investors ought to know, which may not be quite so obvious just by reading the press statements and whatever they read in the newspaper? Anything, any nugget of wisdom or value for retail investors who've never invested in stocks before, who might be considering CapitaRetail China Trust?
I think if investors truly believe the China story, and I think talking about a long-term growth prospect, China is going through that massive urbanization. People are getting very rich, and shopping will be one of the favorite pastime. If they truly believe in this storyline, then I think we are possibly one of the few stocks, or rather REITs, available in the market for them to get exposure to.
All right. Thank you so much for coming in and talking to us about it. Tony Tan, the Chief Executive of CapitaRetail China Trust. Singapore Investment Week is the time when you can find out more about investment opportunities both in Singapore and overseas. The website address is on your screen now. Go to the page and have a look what else you can find out about the various investment opportunities. I'm Mark Lowdy. Thanks for watching.